Hello everyone and welcome to the Ticker.com's news channel on YouTube. On this channel, we review stock markets and discuss financial news, market trends, and economic data from Wall Street to Global Street. So let us get started. Wall Street indices turned sharply lower for the third consecutive week and extended 2025's losses amid self-inflicted policy harms engineered by the U.S. president. Amid high level of uncertainty, investors are increasingly seeking stability in the U.S. Treasury and selling stocks. Donald Trump's constant state of confusion and flip-flops are unnerving investors, stoking fears of stagflation and rate cuts delays. U.S. economy, once the envy of the developed world, was on the sound footing and flashing green on all key metrics, is now teetering on recession. Moreover, Trump administration's lack of competence is visible in how the president announces tariffs, then walks back or allows loopholes, followed by more exemptions to water down initial measures, rendering the initial tariff totally useless. World markets are increasingly ignoring Trump as companies find ways around import taxes and other stable trading partners. In addition, Trump uncertainty is spreading beyond tariffs to immigration, federal budget, and taxes. U.S. non-farm payrolls expanded, wages rose at a slower annual pace, and jobless rate inched up according to the latest updates on the labor market. In February, employers added 151,000 jobs, faster than 143,000 jobs in January, signaling that the labor market remains healthy and despite the tariff storms and growing evidence of weakening macroeconomic backdrop. Jobless rate inched up to 4.1%, and hourly wages advanced 4% annually to $35.93, or rather $35.93. The federal employment fell by 10,000, but more job losses are on the way as several government agencies are undergoing sharp job cuts. U.S. international trade deficits soared to a new record high in January as businesses front-loaded shipments to avoid impending tariffs. Exports increased 1.2% to $270 billion, and imports jumped 10% to $401 billion, resulting in an overall trade deficit of $134 billion. The prospect of higher tariffs are likely to keep businesses ordering more in the months ahead as Trump administration's chaos breeds uncertainty. Across the Atlantic, the European Central Bank delivered its the sixth rate since the latest rate-cutting cycle began in June. The European Central Bank lowered key rates by 25 basis points and cut rates by nearly 200 basis points from the peak of 4.5% 9 months ago. Moreover, the central bank signaled that interest rates are becoming less restrictive, meaning future rate cuts are not guaranteed and they may be fewer than previously estimated. Eurozone GDP growth picked up in fourth quarter to 1.2% from 1% in the third quarter. However, worries of weak economic conditions dominated and household spending rose at a slightly faster pace than previously estimated. Gross domestic product in the Eurozone struggled to expand amid weak economic activities in France and Germany. GDP expanded 0.9% for the whole of 2024, slightly higher than the previously estimated after faster economic growth in the fourth quarter. Consumers are keeping spending to basics amid high cost of living, businesses are laboring under high energy costs, and governments are stretched with their finances. China's exports increased at 2.3% in the 2-month period to February, slower than a 10.7% surge in December, when U.S. importers front-loaded orders to avoid sharply higher tariffs. Exports for the January-February period rose 2.3% to $540 billion, and imports unexpectedly declined 8.4% to $369.3 billion. China's exports to the U.S. are likely to face headwinds in the months ahead amid higher tariffs and a weakening U.S. macroeconomic backdrop. China's export to the Asian region, its largest trading partner, rose 5.7% in the 2-month period amid sustained demand for mechanical electrical goods, fertilizers, and integrated circuits. In other economic news, German factory orders shrank, but retail sales advanced at a slower pace in January. Eurozone jobless rate held steady at 6.2%, and producer price inflation advanced at an annual pace of 1.8%. Home prices in the UK continued to advance in February compared to a year ago, suggesting strong demand despite buyers facing elevated home prices and mortgage rates. Average UK home price is now over £298,000. Let us review key events in global bond, currency, and commodity markets last week. The yield on the 10-year U.S. Treasury eased to 4.23% as investors sought safety and stability in the bonds amid the Trump administration's constant state of chaos, uncertainty, and confusion. Texas crude oil price edged lower by 3% to $67 a barrel amid weakening backdrop of the U.S. economy and skepticism about the Russia-Ukraine ceasefire plans. Natural gas prices in Europe dropped 10%, €39 per megawatt hour, as traders reviewed warmer weather conditions across the continent and potential easing of the EU storage mandate. The euro jumped to $1.08 after the European Central Bank lowered interest rates for the sixth time since June and acknowledged that the policy rate is becoming less restrictive, signaling fewer or slower rate cuts in the near future. The yen strengthened to 147 against the US dollar after policymakers signaled that the central bank is more likely to continue with its rate hike as long as the economic data support the move. Let us shift our attention to major stock markets in the US, Europe, and Asia. European markets rebounded after Germany's leading political parties announced plans to raise the debt limit, set up a fund for infrastructure development, and European leaders agreed to increase defense spending significantly to enhance military capabilities. The Nikkei 225 stock average extended losses for the third consecutive week amid looming tariffs, unwinding of artificial intelligence trade, which lifted several semiconductor equipment companies. Hong Kong and China indices extended weekly gains after China's premier set an annual economic growth target of 5% for 2025, raising hopes of additional stimulus measures. Indian market indices halted a 3-week slide as domestic institutional investors searched for bargains after several mid and small cap companies dropped more than 50% over the last 2 months. Let us shift our attention to merger deals, market movers, and earnings updates from leading companies last week. The Gap Incorporated surged 19% after the specialty apparel retailer reported higher profits in the fiscal fourth quarter of 2024. CrowdStrike Holding dropped 9% after the cybersecurity solution provider said net income swung to a loss and issued a weak sales growth outlook in the current quarter. Best Buy, electronic products retailer, surged 3.5% after the electronics retailer reported an increase in comparable store sales during the fourth quarter. Intuit stepped up its stock repurchase program, and the financial software company reported strong revenue and earnings in the second quarter of 2025. Dell Technologies said AI is fueling demand for its expensive servers, and the company's reported revenue growth in the fourth quarter of 2025. DHL Group expanded its stock repurchase program by €2 billion to up to €6 billion, and the parcel delivery company extended the program until 2026. Deutsche Lufthansa, the German airline, reported an increase in revenue in 2024, but net profit declined. Dassault Systems reported higher sales and earnings in 2024, and the French design software maker guided higher sales and earnings in 2025. Schaeffler AG, the German bearing and powertrain maker, said net income swung to a loss in 2024, but the company held out for higher free cash flow in 2025. Continental AG dropped 9% after the automotive parts and tire maker reported a decline in sales in 2024 and offered a weak outlook in the current year. In the week ahead, U.S. investors are looking forward to the release of consumer price and producer price inflation reports. Moreover, the so-called JOLTS report, job opening report, is also expected to confirm moderating but strong labor market conditions. On the earnings front, investors are looking ahead to the release of results from Ciena, Oracle, Ulta Beauty, DocuSign, Vail Resorts, Dick's Sporting Goods, Dollar General, and Kohl's. In Europe, investors are awaiting the release of Germany's trade data, final inflation data, and wholesale prices. Industrial production in the Eurozone is likely to rebound in January, and the UK's industrial production and manufacturing are expected to show contraction. On the earnings front, investors are awaiting the release of results from Volkswagen, BMW, Daimler Truck, Swiss Life, Bechtel, Clarkson, Persimmon, Hannover Re, Generali, DeLonghi, Bolloré, and Fraport AG. In China, investors are looking ahead to how the government is likely to finance its wider budget deficit at the conclusion of 2 sessions. Moreover, China is also expected to announce its set of retaliatory tariffs for U.S. goods and businesses. Japan is likely to report its first current account deficit in 2 years and contraction in household spending. Inflation in India is expected to weaken further, and industrial production is likely to accelerate. On the earnings front, investors are looking forward to results from Jardine Matheson, TSMC, Formosa International, Yuan Industries, Jollibee Foods, Swire Properties, Samsonite Group, Doosan Bobcat, and AIA Group. You can review daily U.S. and global financial market news, stock movers, earnings, releases, SEC filings, and economic updates on ticker.com and 123jump. You can find the latest financial books on Rudera.com, keep up with financial industry events on eventsinamerica.com, review ETF and mutual fund performance and in-depth profiles on tickerfunds.com, and review market updates and stock movers in India on niveshak.in. That is all for today, and we will